Chantal, I wanted to ask you about luxury, but that's Gary's pick and we're out of time, so we're going to go to your pick. You called it the most boring stock on the JSE, but actually that's probably true. Reunert, it's a lovely stock though.
It is a lovely stock. So I was thinking SA Inc. because SA Inc. just looks quite cheap at the moment. We have the stock market close to all-time highs, but it's mostly being driven by the resources sector and gold in particular. So within SA Inc. I was thinking, well, what company is exposed to a weak rand? So they're an exporter. What company is exposed to the reform agenda in South Africa? And what company will also pay me a really nice dividend if I wait for a recovery? And Reunert just popped up quite naturally. The stock is on a 7% forward dividend yield. It's trading at a very low multiple. They're exposed to the reform agenda in the form of renewable energy and the transmission requirements from Eskom space, and they're an exporter of defense products. So, I mean, it just kind of lands quite nicely for me.
And that stock's come back massively. I hadn't had a peek at the chart recently, and it ticks all those boxes. Gary, you're going with LVMH.
Yeah, so LVMH also a stock that's come back very nicely. So it's actually incredible. I think it's down around 35%, almost 40% from highs. And I think we're starting to see this as an opportunity. It's not one that we hold in portfolios at the moment, but it's certainly something that we're seriously considering. I mean, they've had a little bit of a difficult set of results now, which has sent the stock down even further. But a lot of that impact was actually coming from less Chinese shopping in Japan and quite a high comparison base as well. So if you look at the US consumer specifically, they've seen no deterioration there. And I think, again, you're looking at luxury goods, and this is one of the premier luxury goods groups globally. They are actually fairly defensive. They manage to maintain higher margins. Usually some of that more aspirational brands, they will take a knock, under a tariff regime. But often these are the kind of goods that do get exempt, or at least, the demand remains quite static, and the type of consumer buying them is also can kind of almost swallow price increases due to tariffs. So I think maybe a little bit too much concern around the group. They're sending the share price low and starting to look like an opportunity for me.
And two champagne brands in there, can't argue with that. That's all for Stockwatch today. Thanks to our guests, Chantal Marx, FNB Wealth and Investments, going with Reunert. Gary Booysen, Rand Swiss with LVMH. Up next, the close. Stay watching.